of all, I'd like to thank you all for having me here today. It's an honor to be able to present some thoughts on the digital landscape and especially with regard to the small finance banks. It's my first visit to Kathmandu, to Nepal in fact, and I've heard a lot and really touched by the warm hospitality, and I look forward to coming back many more times and spending more time. It's been a very short visit. I'm sure it'll be very sweet, but would love to explore the country a lot more. Before I start, or before I get on with the presentation, just like to tell you that what I have put on the slides are more to do with setting up context. Some of, and towards the end, it's more generalized information, Gyan if you want to call it. But that is just to set the context. I'd like to probably run through the presentation quickly and give more time for you to ask questions, because I would rather address your doubts or any clarifications than presume something and put them on the presentation. I'll start by setting the context of the small finance banks. The regulator, in our case, the Reserve Bank of India, basically this is straight from the objective. The objective is straight from the document that was released by RBI before they issued the guidelines even. It was for furthering financial inclusion. That becomes a very key term. For furthering financial inclusion by provision of savings vehicles primarily to unserved and underserved sections of the population, supply of credit to small business units, small and marginal farmers, micro and small industries, and other unorganized sector entities. Essentially, these all translate to what are called priority sector lending in India. And then the key point, it was considered a small finance bank. However, RBI was clear even before the guidelines were issued that all this will be achieved through high technology and low cost of operations. I want to repeat that the entire thing, word for word, is from the RBI document, and they had very clearly articulated that even a small finance bank would have to implement the latest of technologies and ensure low cost of operations, and that remains a mandate even today. There's a combination of what the requirements or eligibility criteria were, which was essentially a net worth of 100 crores. For a regular bank, it's currently 500 crores. But for a small finance bank and payment bank, they had the minimum eligibility criteria was 100 crores. Plus, the promoter should have 10 years of experience and be resident Indian and things like that. But essentially, the first one. The others are requirements to maintain as a small finance bank. One is that we have to have a capital adequacy ratio of 15%, which is higher than the 9 to 11 which other banks have. This is to ensure stability and ensure that there is greater owners on a strong bank. 50% of the loans disbursed by us, not in terms of volume, but in terms of value, 50% of those loans should be under 25 lakhs. Again, this is to ensure that we are just not going and doing wholesale lending and big ticket type, to ensure that it is all going towards the priority sector. And priority sector lending, which is to agri, allied agri, animal husbandry, and MSME, those sectors, there are categories, and within that there are sub-limits. For all banks in India, it is 40%, out of which agri could be 12.5, MSME could be 7, whatever. There are sub-limits, but overall is 40. But for small finance banks, it is as high as 75%. Foreign exchange, we are given the nature of how it's envisaged. Foreign exchange is not something that RBI thought we should be directly involved in. So we are not allowed to directly deal in foreign exchange. However, we can be authorized dealer category 2, which means that everything is routed through category 1 dealer. Securitization of portfolio. Any loans that we which we source, we have to do it ourselves. We cannot buy. We can sell, but we can't buy. Again, the rationale being that they would like the small finance banks to generate and further financial inclusion and not meet all the targets by buying. Not meet all the targets by buying priority sector certificates or securitization. Therefore, to sum it up, the expectation is from the regulator to drive financial inclusion, at the same time have extremely high governance standards. As a non-bank, before we converted into a bank, we didn't have a risk department. There was no need to do a risk department. There was no, there's something called the ALM, Asset Liability Management, which was prepared in Excel more as a reporting thing, but there was no need to manage these things. As a bank, all these have come into play. Ops risk, market risk, credit risk, there are all multiple departments coming into play, and these are the ones that, obviously compliance standards are non-negotiable. And an internal audit, which as a non-bank one could outsource, as a bank it is required to be in-house with banking first doing it. And as I mentioned before, adopt the latest technologies and ensure low cost of operations. So 10 banks were given the license to establish a small finance bank. Eight of us, including Suryoday, were earlier a microfinance institution. The ninth was already a bank in a different category called local area bank, which was the earlier avatar of small finance bank, you can say, but they the conditions limited them to operating in only one district, and thereafter became 3 districts which had to be contiguous together. So they could not spread geographically, they were limited in their geographical presence and therefore in how much they could grow. So Capital Local Area Bank converted into Capital Small Finance Bank, and then the 10th AU was an NBFC, was more into vehicle and MSME lending, and the other 8, like I said, is MFI. This is just to give you a sense of where we will be 3 years from now. This is based on informal discussions. One thing you have to understand with small finance banks is 8 of us together came, converted into from MFIs, right? MFIs in India went through a crisis back in 2008-2009, and at that time formed an industry association called MFIN, Microfinance Institutions Network. That thereafter got a self-regulatory organization, SRO stamp from RBI, and we have a very high degree of collaboration. We don't see each other as competition. We see each other more as, if together we can do better rather than compete with each other. So if we want to go to a new geography and MFI A is already there, we actually go and ask them about what is the market like, are there any risks here, and then establish. It might sound a little odd, but that's how it's happened in practice, and that continues even to this day. We have a small finance bank association group, so we meet jointly, discuss issues jointly, and any representation that we make to the Reserve Bank, to the regulator, is almost always a joint representation. The numbers are just to give you a sense of where the industry could grow in about 3 years from now. Then to set a context on the Indian consumer, about 650,000, 6.5 lakh villages, but only 52,000 villages have a bank. So there is clearly a vision that there should be some kind of a bank. I wouldn't call it bank branch, we'll come to that as we go along, but there should be some banking facility extended to these villages. 300,000 ATMs, but if you want to buy a biscuit or a chocolate, you can go to 6 million shops. Whereas if you want to withdraw money, there are only about 300k ATMs. Point of sale penetration. The debit cards are around 930 million, credit cards 47. Arif had mentioned earlier the exact number, between 40 and 50 is actually 47. And POS machines, what we have is kind of lower penetration compared to the other countries. Now, there's an interesting thing about what is called a sachet version. In the FMCG, the fast-moving consumer goods space, for the longest time, there was growth, but there was some kind of a stagnancy. And then, because predominantly most of the goods were being sold in big towns, there's a limitation of how much people buy. And then as they were going to tier 2 and downwards, the towns with a lower population, the offtake was less. And somewhere, I guess somebody by accident or by design got a good idea and started selling these in sachets. For example, instead of buying a shampoo or bottle of this size, you would get sachet shampoo, which we see in the hotel rooms and stuff today. That extended to pickles, to toothpaste, everything was available in smaller form factor. When that happened, the affordability or easily just buying something for 1 rupee was easier than buying something for 100 rupees. Even though if you buy the same quantity, this would translate to 500 rupees, but it's easier to buy something for 1 rupee. So similarly, the question before us, and this has been kind of replicated by the telecom industry, the question before us is how can we look at a way of extending banking services to those who are yet to be reached in the villages, the way the sachet revolution happened in FMCG. Most importantly, when we talk about cost of operations, as you can see, the cost of servicing somebody at a branch is 20 times more than at an ATM, which itself is 15 times more than digital transaction. Essentially, cost of servicing somebody at the branch is nearly 300 times of servicing them digitally. So, Arif was talking about how, I also noticed yesterday about how when we came, everybody was on a phone. In India, we have these figures state that there are about 350 million smartphones, 400 million active internet users, which means even the desktop-based ones. And there's, some statistics on the usage of data, which is quite high. While we have so many mobile phone users, only 10% pay their bills online. The rest are using assisted channels. And those are the assisted channels which will come into play as we go along. I'll touch upon that. So, while we are talking about digital trends, like I mentioned, assisted channels are something which, which extended with more natural capability. As you know, India is a country with many languages, more than you can count. And in order for something of this scale to be entirely successful, the best way to reach or to ensure that would be to render these services in a language that the customer understands. And there's a lot of work happening on the vernacular part. And if those combined together with local partnerships, we'll see a huge uptake. This leapfrogging is something which is not a challenge but actually an opportunity. I agree with what Mr. Subha said. I remember back in the 90s, I was working for Motorola. Pages had come into India, but within a year or two of the pages having come to India, we were struggling to sell pages. By that time, cell phones had been introduced, and within a few years, less than 2 years thereafter, 3 years thereafter, the entire paging industry died in India. So essentially, India did not see, I don't know how many of you remember pages even, India did not see the paging revolution at all. It came in and it went before you knew it. Whereas when I went to the US many years later, there was still a use case for pages in the US. Of course, even there it's gone, but there was some use. India leapfrogged into the mobile phone technology, and since then has leapfrogged multiple times. Similarly, even on we were on 2G, we went to 3G, we went to 4G. Now there's already talk of 5G. But in many parts in India, it's a leap from 2G to 4G. So leapfrogging actually helps you. It's actually a blessing, because when you go in technology, when you go like this step by step, you are probably going to be stuck with a lot of legacy systems and processes. And then to dismantle all in one place is going to be more expensive. Whereas if you skip a generation and just leapfrog into the latest one, you reap the benefits directly. This is something which, to continue from where Arif left, the most interesting statistic that's come up now, last month, is the number of UPI transactions have surpassed debit card and credit card transactions put together. It's a huge achievement, and UPI is something which is the entire nation, I believe, is proud of. It's an amazing piece of innovation, and has made it's a showcase in digital payments, so to speak. So congratulations, Arif. Fintechs is another buzzword in play, which we will. They are contributing mostly to the UPI revolution, but we'll come to the fintechs part later. So, if the expectation from SFBs is high tech, low cost, then one can only meet by going digital. But what is digital? Then there is digitization, there is digitalization, and the transformation piece, which is the theme of this conference. Just to set the context, digital. It refers to a host of powerful, accessible, and potentially game-changing technologies with social, mobile, cloud, analytics, Internet of Things, cognitive computing, biometrics. This is essentially tech. Okay, it's use of tech. So and then comes digitization. This involves standardizing business processes associated with cost cutting and operational excellence. It imposes a discipline in the business process that has been, over the years, been performed in a particular way. But most importantly, it is creating a digital version of an analog or physical thing, such as a paper. And just by converting this non-digital form into digital format and using it, by a computing system for your business processes. Digitalization, which is a more comprehensive one, it refers to enabling, improving, and/or transforming business operations and/or business functions, models, processes, activities by leveraging digital technologies and a broader use and context of the digitized data. Turn into actionable, knowledgeable, and with specific benefit in mind. That's the key. Specific benefit in mind. So when you adopted some digital technology and you've digitized, you've converted, is not, the data is just going to lie there and not going to, optimize the business process, and the data is not going to be used for actionable outcomes. It's going to be a waste in effort. Therefore, what we do is we digitize information, which is paperless, which digitalizes the processes and roles that make up the entire business operation. And then, with this, we digitally transform the business and its strategy. Please understand that each one is necessary, but not sufficient. So they all, like I mentioned just a little while, they all go together. And digitalization and digitalization are essentially about technology, but digital transformation not. It is about the customer. In Arif's speech also, you would have noticed that he's mentioned about customer many times in the context that the fintechs and the companies that are currently coming into play, it is all centered around customer experience. today's millennial, today's customer does not have the same loyalty that we or our earlier generation had. They would want to, in the context of a bank, they'll bank with that entity. I'm saying entity because they may not even, that entity may not be a bank. They will conduct their banking activities or financial services through an entity which provides them the ease of doing transactions, provides them the best customer experience, probably provides a more holistic bouquet of services so they don't have to go to multiple players. Going with, when we talk digital and everything, apart from the context that's set on digital transformation, you also have these terms that are bandied around all the time. Fintechs, open banking, RPA, chatbots, analytics, AI, ML, you've heard of all this. We'll touch upon these quickly. The question is it all hype? Probably not. This gives a busy slide, a couple of slides you'll see like this, but it's just to give the context. You can probably go through it at your leisure later. The fintechs operating in India are operating in various flavors. There's payment gateways, there's personal finance, there's prepaid gift cards, there's card acceptance, bills and recharge, remittances, credit score research, and what is this? Lending. But the most important piece was right on top, the red one, financial inclusion. Because generally what has been, the talk is fintechs are all playing a valuation game, so they just go set up something in a which is highly tech-based, driven purely by very savvy customers. At the end of the day, if we have not reached the other sections of the population that we are aiming to reach, which is financial inclusion, I don't think the scale will ever be achieved. And this is again various spaces, variation of the earlier slide to be honest, various spaces in which the fintechs are operating. It's nice to see that the very first name, top left, under payments, is Razorpay, which was something set up by RF here. So it's just a coincidence, it's right on top. I came to know about this Razorpay experience only last night, so and these slides were given much ahead, so it was not fixed. See, as you can see, fintechs are operating all over the place. It is not purely in remittances. Lending is a very interesting area. Today, you have fintechs being able to, how do I put it? So as a customer, I go to a fintech, let's say it's an app or whatever. I enter a few details, and in as little as 2 minutes, I may have money in the bank. Okay, my loan gets approved, and my loan gets disbursed, and my bank account gets credited in as little as a few minutes. It's possible. Whether it's the rule, no. But it is possible. Obviously, there are decision rules engines that run in the background. There are some risk appetites to be set because you're taking calls on a limited set of variable data that you have. But based on what information I put in a matter of seconds, my identity is authenticated through Aadhaar. Parallelly, my income tax PAN number, which is permanent account number, is validated. There are APIs available to fetch data of my income tax returns. There are connectors going and fetching bank account details, my credit, most importantly, credit bureau score. All these happens, in a matter of seconds. And then the business rule engine, which consumes this data, and based on the parameters that we have, that each entity is set, is able to then say go or a no go, and even disburse the loan if so required. So some of these fintechs are actually playing in that field. Insurance is another area. We have two digital insurance companies that have been set up. Please understand, these are general insurance companies issuing policies, but they don't have branches. Their entire operations, their entire mode is digital, online. There's a company called GoDigit and there's a company called Acco. Both of them playing in the insurance field, general insurance, but the only way you can reach them is online, and your policy is also issued online. It will come to you as an email, and of course they have apps to access. You can your claim processing, everything is done digitally. So fintechs, as I mentioned, they will not be standalone entities. They'll actually eventually wrap around other financial services entities. Some of the fintechs which did try to be standalone and lend run into issues, because when you're lending money, it's quite easy. People are willing to take money from you. But when you have to collect the money back, it's not always digital. You have to have that interaction with the customer. One payment doesn't come, there is an interaction required. So collection can be a huge beast in the lending business. So these are all lessons that they have learned quickly, adapted. Now we're back to they've gone to a system of partnering and collaboration. So some of the fintechs now collaborate. For example, the fintechs will come to Suryoday, and then while they do all the heavy lifting, we only do the processing and disbursing of the loan. I mentioned about the payment system vision 2021, which RBI released about a couple of weeks back. That's definitely going to be a catalyst for the digital transformation. Because what RBI is clearly aiming is a cash-light society. Again, like was mentioned earlier, it would be very difficult to other. It will take some time to for that kind of to transform. In some places, it might happen very, very quickly, very fast. In some, it might take more time. China is probably the greatest example of going cashless, to the extent that sometime back, the Central Bank of China, apparently, this is anecdotal, but I believe it's true. It's from a very trusted source. I was told that the Central Bank of China actually issued an advisory saying that establishments cannot refuse to accept cash, because the QR code based payments and everything became so popular and so convenient that there are lots of shops which put up saying they do not accept cash. So it became cash is legal tender. So the central bank had to issue an advisory saying you cannot refuse cash. Open banking. Now this is something which is an interesting concept. It's a threat in one sense for banks, and in another sense an opportunity. Now, what open banking is essentially all about APIs, application programming interface, which is basically for those of you who are not technical, an API is a mechanism of sending information from one system to another system, and essentially for the two systems to talk to each other. So we have a standalone system here, we have a standalone system that through an API, I will be able to connect to that system, get the relevant information and bring it back here. So open banking is something which is being talked about around the world. There actually happens to be at least one, maybe two, who have taken baby steps in India. Now, there's a company called Open out of Bangalore in India, which has tied up with a bank, ICICI Bank. So their value prop is this. So they give one single app, a digital app, to their customers who are essentially small merchants, SMEs. And with that app, that entity is able to do their entire purchases, maintain inventory, raise invoices, and the like. So it's essentially a small ERP kind of solution. So they can manage the entire business. And from the same app, able to make payments, able to withdraw, able to receive payments and everything. And that is, like I said, because there's an ICICI Bank in the back end. So there's a front-end app which is now talking to all these various resources and able to provide one unified solution to the customer. The other, that's the lower piece which I mentioned, SMEs, integrated accounting and tax, whatever. But for individuals, account aggregation, I happen to have, let's say, 4 bank accounts. Obviously I have an account with Suryoday itself, and from my legacy days, I have some accounts which I still maintain, by the way. I have accounts with HDFC Bank, ICICI Bank, Axis Bank. I still maintain them for one simple reason. Not too many balances there. I still maintain them because I need to keep trying to figure out, what the experience is with that bank. I keep using their apps frequently to figure out, what are they doing and how we can improve. So now I have these 4, 5 bank accounts. But as a customer, if I want one unified statement at the end of the year, even if it's for income tax purpose or whatever, what am I going to do? I have to individually go to these 5 accounts, download data and do everything. But if I have this app, which is provided because of open banking, the concept of open banking, and that app is now going to talk to these 4 banks, get that information and give me one consolidated view. It's a huge value add for me. That is what is being achieved with open banking. And of course, all fintechs, please understand, their business model is predicated on data. And not just fintechs, even the Google is the greatest example, and the next one is Facebook, WhatsApp. All of them, what their ultimate revenue model is data. All the data that passes through their systems, all the data that we track is what they use to be, and there are really, really complex AI ML machines running in the background to enable that. But based on that, they are able to, give you targeted suggestions and offers and stuff like that. RPA, robotic process automation, is essentially it's a software robot. It's not a physical robot. It's a software robot which basically simulates the entire business process. This is something that is now gaining traction. What it essentially does is make life easier instead of, if there are, in a business process workflow, let's say customer onboarding or where there are forms filled and then somebody then validates it and says okay, and then it goes to the next queue and there's other bunch of information done. So there's a lot of either data entry or eyeballing, just looking at it and then saying okay and sanctioning. So what RPA does is automate all these things. So it takes the human interface out and instead it based on all the configuration that is set, it looks at all the information and it automatically passes it through. That's one use case. There are use cases on, for example, Arif mentioned about UPI being used for overdrafts. Similarly, RPA tools can, based on transaction history, based on, how it can, a request comes, it can automatically process it rather than a human looking at the application, looking at the history and then having to take a decision. So, with RPA, they are expected to reduce the burden on IT because it's something which is a one-time setup and then it keeps learning and you just have to keep tuning them. Obviously, these are all bots, so they work 24/7. You don't need 3 shifts of 8 hours each people eyeballing. Technology costs are going down. There's not much coding required. So accuracy rates are at least studies prove them to be more accurate than when a human is, processed it. Obviously, along with that goes productivity increases and consistency, and it goes without saying that ultimately all have to be compliant as per the regulator's requirement. Chatbots, something which we spoke about, is an extension of our field. This essentially, we have heavy users today because we order things on Amazon, online shopping, or we use taxi service, Uber, Airbnb. If you have a customer issue, you essentially log into the app and you report something. There is a back and forth. There's a chatbot, and there's a bunch of legacy information that's been recorded, fed, and the system keeps learning over a period of time. So, as you type your query, the system, it's a chatbot, the bot basically analyzes it and then comes back to the query and tries to solve it. Believe it or not, 9 out of 10 cases, the issue is resolved just on the chat. It's very rarely that you have to now say, my issue is still not resolved, please put me onto a human interface, which is also possible right from there. I mentioned sometime back that underlying all this is data, and the amount of data that is without proper analytics, it's not not going to help. It's just going to be sitting there, and for the future of any entity, to be able to use data is what is going to drive their success. So there are 4 types of analytics: descriptive, predictive, diagnostic, and prescriptive. Descriptive is basically what you can do even in Excel. You have data, you have visualized it, and it just describes what what the various data points show. Predictive is when you use the data to predict what could happen. I believe I have something on that. I will just come to it. Diagnostic is to figure out what went wrong, and what needs to be done. And prescriptive, obviously, based on this, you will take actions for the future. But analytics is not just about looking at the customer and saying the cost per transaction is this, or the number of mobile transactions or digital transactions this, and all that stuff. Eventually, it is the analytics are being used for fraud. That's where the predictive analysis comes. As transactions are happening digitally, you would want to know the potential that transaction is a fraud. It is possible, and NPCI has a fraud risk management tool already. Customer analytics, I think, is self-explanatory. I mentioned that. Risk analytics for improvised portfolio quality. This is for your lending portfolio. What kind of analytics can you do to ensure that the portfolio quality is good, or you can take actions to ensure that it doesn't go bad. And productivity analysis, when you have a huge bunch of field force, sales force all over the place, you need to ensure that they are productive. So what some of our solutions do is we have implemented lead management solutions and Salesforce effectiveness solutions. What they do is in the morning when the Salesforce, the guy goes in, he logs in, he says, yes, my shift is started. And we can actually track the entire route that he's taken through the day. This is the app will digitally, will ping the geolocation every 15 minutes. I mean, if you do it every minute or every second, the battery drains out, so you do it every 15 minutes. So you don't need to know what he did in between. 15 minutes is a safe interval. So every 15 minutes it pings to see where he is, and then maps the route. And whenever he meets a customer, he's supposed to enter the customer that he met, and his geolocation at that point is tracked, so you know where the customer has been met. And at the end of the day, based on the distance he's traveled, if he or she is eligible for conveyance allowance based on the number of kilometers traveled, that is automatically credited into his bank account, or at least once a week. So, how does this help for, say, deposit customers and loan customers? When a customer is coming and placing a deposit with you, essentially it just opens a fixed deposit or gives a savings account. But the basis, the data that you have collected on his demographics, on the various alternate data that you can capture, and the transaction history, you can actually then look at cross-selling third-party products or even other products within your organization that you offer. As a bank, for example, our savings bank customers are also sold insurance products, life insurance products, general insurance products. So, and for lending customers, the credit bureau input. Does Nepal have a credit bureau? Great. So credit bureau, has a huge role to play in lending, because unless you know the person's past track record, you would not be able to take an informed decision on lending to him or her. Because the track record gives a sufficient indicator of the person's intent to repay the loan that you are proposing to give. Again, in the case of loan customers also, you do cross-selling and upselling. Collection management, like I said, is very key, because if you do everything digitally, collection is something which, while you can do digitally, you have mechanisms to pull the money in. But if that was a failure, if it was a bounce, and the payment did not come through, thereafter there is human interaction. And of course, market analytics, which helps both, that I believe is, this is the one. Market analytics is, this is what we do at Suryoday. Just a snapshot. What we do is, for our entire microfinance customer base, we get monthly PIN code reports from the credit bureau. The PIN code report is essentially for each postal PIN code level. It's an aggregate of all the microfinance customer data there, saying this many customers, this many institutions, total loans disbursed is so much, total outstanding is so much, whatever, and how many are 30 days past due, or 60 days past due, or 90 days past due, whatever, all those bucketing is. So every month, this PIN code report, we put it into our database, along with our information from of our customers, so that we can then triangulate and say that in the areas where we operate and in the PIN code where we operate, how is it behaving? And then we look at areas where it's overheating. Now, overheating would mean that we believe that there are too many players, too much of loan outstanding per customer, and also delinquency. So these all become red over a period of time. So that gives us an indication of whether we should pull back, go slow, or spend a little more time figuring out what's happening. But it helps immensely. Even about 2.5 to 3 years back, just before demonetization hit, this kind of analysis told us that there was a region in Maharashtra where there was something wrong, something not going right. So we actually slowed down our disbursements. We had stopped disbursing in the entire Vidarbha area, as it's called, Nagpur and surroundings. And we didn't know what the trigger would be or what would happen. It so happened that demonetization happened in India, and that became a trigger, and that entire portfolio went back in that area. Luckily, we had not disbursed too much towards in the previous 6 months, and that actually saved us quite a bit, whereas others had gone a little aggressive. So that kind of analytics, which tells you based on hard data what's happening at the ground level, is something that will help in this. And of course, geomapping tells us, we actually geomap each and every customer of ours, so we know how they're concentrated. So that tells us where we are operating and what else we should do in those areas. Now, coming back to the small finance banks, this in intervening period, I was just trying to give a context of various things digital. Now, if we come back to small finance banks, now deposit customers, we at Suryoday or any small finance bank for that matter, almost all of them without exception, can onboard a customer start to finish, brand new customer. If I have that handheld tablet with me, I can walk across Abhishek and get open his account in less than 3 minutes. All I would need him to provide is an Aadhaar card and nothing else, Aadhaar number, so to speak. This of course is enabled because India happens to have this concept called Aadhaar, which is a unique identification number. Yes, there are, it went up to the Supreme Court, some court cases going on and everything, but it has since been clarified, and today as a bank, we are in a position to use Aadhaar to validate a customer. So with the Aadhaar number and the person's biometric or iris, which is the eye scan, or an OTP to that person's mobile. With one of Aadhaar number of one of these validations, and I take a picture, and I'm done with onboarding the customer. I can get them onboarded in less than 3 minutes. Customer transactions, I would not touch upon it. You've already seen how NPCI has revolutionized the entire payments landscape in India through these methods. And as I mentioned, we keep skipping a generation or two. We've managed to therefore leapfrog by doing that, and I believe there's an opportunity there for you to also leapfrog. As for loans, I just some time back mentioned, when we're onboarding a customer for a loan, I can do all the validations, whether it's validating the customer through eKYC PAN or credit bureau score. We now have a GST regime, indirect tax. It's called goods and services tax. There's a unified tax. The entire country there's just one tax. So now everybody's GST returns are available. I can make an API call and get a GST return, and therefore, based on that merchant's GST return, I can estimate his cash flows and take a decision on giving a loan. So, using credit bureau data, using the person's location, any internal scorecards based on the risk appetite that an organization has, putting all these together, we can quickly arrive at a decision and give a loan to a customer. Depending if it's an individual customer, minutes. If it's a corporate customer with multiple, maybe hours. But the timeline has actually shrunk like crazy. If earlier onboarding a customer or a loan, housing loan, let's say this simple one, personal loan, let's say took 7 days. Today you can do it in 7 minutes.
Is there any amount size below 25 lakhs?
No, you can do it for any amount.
For your particular bank?
Even for my bank, you can, 50% of my loans have to be less than 25 lakhs, but I can do about 25 lakhs also. And of course, on the customer transaction side, when we collect the repayments, the match, and as you heard earlier, we can set up mandates and standing instructions through UPI, and this also leads to instant on-demand statements for the customer. But now, moving away from the customer, digital is not always, while it is, finally customer is king and it's most important. However, there is enough and more opportunities within the entity to digitize, to transform digitally. We have set up this. Our HR, for example, hire to retire, we are essentially paperless. We are not 100% paperless, I'll be honest, but we are getting there. We happen to use a solution called Workline. Even if a person applies for a job, it is done digitally. The offer, any interview that's happened is updated. The offer letter goes by email with a link. The person reads it, accepts it electronically. After that, every single communication with the customer, I log in my attendance through geotagging. I go there outside the office and I log my attendance. It captures my geolocation and I'm logged. So everything we in human resources is something that we are looking at doing.
So recruitment to reliability is the operation.
Yeah. Many paperless. The processes are automated and we don't generate as much paper. Any company, for example, if somebody is, salary increment letter, performance appraisal letter, everything is digital. There is no physical copy given. They have to log into Workline and download the report. In fact, even after a person leaves, we put them on an alumni portal. They can log in even after the leave and they get all their old documents are still available for them.
But then how would you address, at times you may have to recruit somebody from your promoter group, their nieces, daughters, sons, someone with recommendation, they may not qualify to go through your online recruitment.
No. See, the online recruitment only replaces the paper process, but it doesn't take away any, it doesn't automatically qualify somebody, just because they're related or whatever.
So there is still room for people coming through back door.
Sorry?
There is still room for people coming through back door.
No, backdoor is safe. It's monitored very well. No, see, what this does is, even if in your the example you mentioned, the reference, somebody's niece or daughter is referred to us, we still ask them to do this electronically. Because they have to upload their background,
Just on a lighter side.
Yeah. Biodata, the education certificate, everything is uploaded by them.
I think just a note here for the team sitting here. I think this is an opportunity for us to, one, start automation is actually this HR is quick win to get started. This we had discussed a couple of times at the industry level, because this is a quick win and actually we could get it started very quickly, because a lot of, I think.
You just took the words out of my mouth. I was going to say that with all due respect, because this is in your control. I mean, you do not need government or regulator permission for this. I mean, there are no overarching guidelines.
As long as your board is comfortable with it.
And similarly, procure to pay. This is purchasing. So all the purchases that we make, the purchase requisition is made electronically. So if somebody wants to buy something, let's say 5 laptops, the IT department wants to buy, the requisition is put, and the approval matrix has already been configured in the system. Depending on the type of item that is being purchased, or even service, consultants, whatever, it goes, and depending on the value, it goes to a particular workflow queue for people to approve. It can go all the way to CEO. Once that is approved, the purchase order is released, and once the goods or services are received, it is entered. The vendor can actually also log in and upload their invoice, and then the payment processing is all done. Field force effectiveness, I already happened to touch on just some time back about how we do that. So, I'm coming to the end of my presentation, then I'll take all your questions. The approach to digital, while the simplest thing would be your low-hanging fruits, the ones that are within your control. One thing to remember about digital, a mechanic, he has the luxury to shut the engine and work on it, right? But going digital is more like a doctor. There are multiple things that you have to do while the heart is still running. Okay? Similarly, when you are implementing or going digital, you will have to understand that you have to keep in mind that there is already a process that is in place. There is already, and this was, overnight replacing was one strategy, or doing a pilot and then doing it in phases. It's all depends on the scale, depends on the complexity of the process that you're trying to digitize. But it's very important that you keep in mind that it's a running business. Therefore, one cannot afford for the running business, whatever is going well, to get affected. It requires an immense amount of planning and testing before you decide to switch entirely. One thing which is generally a lot of people ask, but I will quote from our own example experience. When organizations say, and it comes top down mostly, right, that that we're going to go digital, the first issue is one of fear. Many people fear that their jobs will go away because it's not going to be done by them, it's going to be done by somebody else. What we have found, I mean, it was initially told to me, I was also a skeptic, though I was pushing digital, but I was on that, in the back of my mind wondering that actually it eventually enhances productivity and it makes life easier. So I managed to convince my team also that this is how we should go. So our entire microfinance process, I'll touch upon it because even today, 85% of our loan book is microfinance loans. We have 1.2 million customers that we serve active today in microfinance. And our microfinance branches, we have close to 300 today, spread across 8 states of India. You can imagine the scale, and there are about 2,000 employees who are part of this operation. Now, the traditional method was for the field officer to go meet the customer, which is typically the poorer segment of the society and in slums and semi-rural areas. They would go, they would collect the application form, they would collect photocopies of Aadhaar or voter ID and stuff like that, bring it back, then that would travel by courier to a central office which would do the data entry, approve, and then they would say it's approved, after credit bureau check and everything, it's approved. And then parallelly, of course, there are customer training and meetings happening. And then finally, the central office sends a disbursement sheet and along with a check for withdrawal. From there, this guy goes to the local bank, withdraws the money, and on the day of the disbursement, gets a disbursement receipt, everything, and hands over the cash to the customer. This microfinance, the traditional concept, and took anywhere between 15 to 24 days. And we are not alone in this, or we're not necessarily the first, but most people have digitized this entire process. Some of them have shrunk it to as little as 3 days, but that is the compromise of certain processes which is not truly welcome. Because in the microfinance business, you need to meet the customer and go through that 2-3 days of training with the customer. Today, what we did is we designed this entire process. Today, my field force goes with this integrated tablet. The customer is identified through Aadhaar and biometric or iris. It's capable of both. And any document that we need to take on paper, unfortunately, there are still a few things which are required either regulatorily or legally. For example, I'm going to do a credit bureau check on that customer, so I'm required to take the consent of the customer that I'm doing a credit bureau check. So some of this still requires a piece of paper and a signature. Unfortunately, the digital one there is not as common. So those pieces of things, I just take a photograph. Okay, and everything is passed through electronically. So my back office, which had say 150 people, now they are able to do. If I was doing 10,000 loans with 100 people, now with the same 100 people, I can actually do 10 times as much volume. Because a lot of the transaction, a lot of the processing has already happened on the field. All the data has been captured, everything is done. Now out here it is only a last minute, take and go, which is required regulatory. Now why I'm telling you this is when we introduced this, there was always a fear in the mind of field force, and there was a resistance. It looked like it was going to fail and everything, but within a month and a half, when we said that you have no choice, you have to do this and everything, within a month and a half, they started realizing that it's made their life better. And now, we are processing loans in 3-4 days. Each and every field force person is happy. He's actually acknowledging that his life has become easier now. Because his job is still there, he's still doing the thing, but he's able to do more. And he goes back. So, there is a change management issue one has to address, but it all depends on that particular context of that. Sorry if I've taken more time.
No worries. Let me engage you for like a few questions here before we get into the screen. All right. What's your total employee size at your bank?
4,000.
4,000. Out of 4,000, how many people are dedicated to digital vertical?
Digital vertical. There are two parts to the digital vertical. One is the product innovation angle, which Arif also spoke about. One is the product, and another is the technology aspect. The technology aspect is the execution piece. But more important in digital is visualizing or figuring out what needs to be. It's more like product innovation. That is a team of two.
Right.
Just two.
Okay. And you're in the product innovation. So most of it is outsourced.
No, product innovation, that is in-sourced. That is a stream which decides on what products we can launch. What should be the configuration of the product. What should and digital goes with customer experience. For whatever we're delivering, is it going to be delivering adequate customer experience? Is it going to give a wow factor? Right. So those are things which are thought of as the digital initiatives team. Then the requirement is passed on the technology team for development and execution.
So what is your in your total OC? What is the size of the technology investment?
Technology investment. Okay. Let me take a minute and give you a context here. So when we got the license for a bank, and I also come from a tech background, so I was running technology all along. And I'm a firm believer in outsourcing. I don't believe having anything in-house. So as a non-banking financial entity, NBFC, MFI, my tech team was again two people because everything was outsourced. We were using things off the cloud all along. And it was just linked to either number of customers or portfolio size. So it was very 0.02%. When we went on to become a bank, we met with some very senior industry people who celebrated CEOs of large banks and consultants. And they gave us a scare. They said, oh, this involved investment of 400, 500 crores is what, and you saw the net worth requirement for a small finance bank was 100 crores. At that time, our net worth was just about 140 crores or something. And somebody says, oh, you need 400 crores for investment. It didn't sound right. I told my CEO, this is, for sure not right. There are other ways to do it. So the same mantra of outsourcing continued, but we do have an in-house tech team now, but those are managers, project managers, business analysts, and that's a team of around 40, including the analytics team and everything put together, around 40. But we outsource to an entity, so everything is managed by them, hosted by them. It's in a data center, which is essentially it's our own private cloud. And we have done this at a cost, which is highly palatable. That guy mentioned 400, 500 crores, 500 crores investment initially. We won't even be spending 100 crores over 5 years.
Wow. That makes sense. Good.
Yeah.
So can we move to this question?
Okay, what support you suggest are required from central bank as we have? See, the transaction limit is something which the central bank decides for various reasons. RBI also had that limit. At one time it was 10,000 rupees, but since then it has gone up, and as the customer base matures, as the transaction history and everything plays out, the regulator gets more of a comfort. In the earlier session, you would remember that there was this entire thing about digital versus fraud, right? I mean, whenever you do something digital, then you're always fraught with some risk. All it takes is for one bad transaction and it upsets the whole thing. So the reason regulator puts these limits is essentially to ensure that there is no black swan fraud case that can upset the entire banking industry. So learning, and over a period of time, these limits are increased. Today, in India, you can set your own limits. For example, in our bank, we allow up to 10 lakhs a day, but a customer can choose. In my mobile banking app, I can, suppose I set you up as a new payee. Well, I'm allowed to do up to 10 lakhs a day. I set you up as a payee. I also said, saying that to him, I will not transfer more than 25,000. So even if I try to transfer more than 25 to you, it will not allow because I've said that for you. So these sublimits and things can be
So
set.
limit is like, in India, it's given, the authority is given to the customer. So they can set that.
Within the overall limit.
Even within the overall limit is 10 lakh per day through mobile phone or whatever. I think, alright, I think we have regulators sitting also in this room, our executives from the payment department. I think there may be something good news in pipeline perhaps. You know, the limit is, I was talking to Chancellor in the morning, so there's a good news, let's hope for all the best. But I think the responsibility lies on the bank side to ensure the risk and the security aspect. I think once that the regulator is confident on that, takes that there would not be any kind of infringement, then perhaps the limit would be much better.
Yeah, so just to before the next question, I'm sorry if I'm sounding like I'm sermonizing or giving a sermon, but I'm going back to one of the questions asked in the earlier session about Nepal being where it is, or how do you leapfrog into the next thing. See, like I agree with you that it is a huge opportunity that you have to leapfrog, and it is for sure possible to execute. But in my view, it requires a combination of the government, regulator, and the banking industry or the financial service industry to sit on a common table and frame the rules. Otherwise, it will happen in bits and pieces. And probably NBI is quite well placed to facilitate it. I mean, from what little I know. But if these the industry, government, and the regulator are not together at the same table, it will be a very long journey. How do you link digitization to monitor the small borrowers in rural areas and organizations? Well, actually, digitization makes it easier. At the tip of, on any device or the desktop, at any point in time, I know all the details of the customer, what loan we have given, how many loans we have given, what is the repayment track record, whether, for example, in microfinance today we collect on a monthly basis. So this morning, when the field force goes to collect, on their tabs they know where they have to go and how much they have to collect from which customer. And there are meetings time set. So typically all the collections happen between around 8 in the morning to 1 p.m. that time frame. At any point, if once the meeting is over, it's all online. I know the status of that customer, whether the person is repaid or not. By afternoon, if payments the collections have not happened as scheduled, the business head can actually start calling and asking why repayments have not happened. So it's very easy to monitor even the smallest of borrowers.
I think the third question is also on the interest, but in addition to that, I mean, what about these IDs and the biometric? So are they legally protected under Indian Act?
Yeah.
Oh, okay.
So good thing. I wanted to speak about that actually. We spoke last evening briefly on this and the absence of an Aadhaar-like infrastructure in Nepal. Please understand, India did not have Aadhaar few years back, and in fact the tremendous amount of growth in the Aadhaar seeding has happened only in the last 5-6 years. Earlier it was much. Now, what Aadhaar does, if you are able to have an Aadhaar equivalent in Nepal, it will be really good, but in the absence of it. What Aadhaar does is it's a single database with all these things stored. Obviously it has to be secure, which the government will take care of. But anybody using that services is getting authenticated because my biometrics is stored, my iris biometrics is stored, so it's getting authenticated. Now, do you need an Aadhaar to authenticate? Let's say you don't have an Aadhaar. you still need some mechanism if you want to use iris or biometric. This is also biometric, this is also biometric. This is the iris, eye biometric, this is the finger biometric. So you need some database which stores and can validate. Now, who is authorized to store? In India, for example, Reserve Bank said banks should not store biometrics. So earlier it was happening, then it was scrapped. So now we move to others. So, but if it's allowed under your regulation, then the best way of identifying somebody is through this. You can use a mobile OTP. You can use other technologies on a mobile also to validate. The only issue you may have is the question which some people will ask is, what if my mobile is stolen and somebody else is using it? Then how will you know it's me who's validated? Then you know, face recognition, APIs and all that will come under.
Yeah, actually, the Nepal government perhaps may have the largest repository of like these fingerprints in the world. Perhaps it is in Nepal for every document.
Okay.
As soon as you're 18 to apply for citizenship, you have to show your thumbprint.
Oh.
And for passport, you must show your thumbprint. For driving license, you must give thumbprint. What else? For the owning a land, building, even a bank account, right? Even when you go to take a bank account, you have to show your thumbprint.
But is it stored in the central database?
That is, we have not digitized. That's a key question. So we have not digitized, but without thumbprint, if you don't have thumbprint, then you are
Okay. No, but that is one thing. I see it as a positive. There is one hurdle crossed. Because in India, when this thing was done, they were asking about privacy and this and that. You have already crossed that hurdle. So now you
actually, in some district of Nepal, you won't see the thumbprint because people will hide it.
Okay.
This is just a joke.
Yeah. Yeah. Correct. Yeah, that's what I said.
While the regulator could reflect on this, perhaps if we could digitize.
No, it's a very powerful tool, and it's probably the greatest solution that you can. I mean, there may be alternate. I do not know, but this is one thing which will transform financial inclusion without a doubt. Without a doubt. And the other thing, sorry, I just want to touch on when you talk about financial inclusion is. I mentioned there about 650,000 villages and only 50 odd villages have a branch. The mandate for us also is to set a 25% in unbanked rural centers, which means rural areas which do not have a bank, and the population is typically less than 10,000. It is always a problem because we have found villages where the population is, believe it or not, 40. And we go to a cluster, there are only 40 people. How do you go and put a branch there? First of all, you will not even get a building or what you call a room to put a bank branch. So that's where the government, the regulator in India has this concept called business correspondent, who acts as an agent. So that is a model which I can explain in detail if you wish.
That's very interesting.
I'm not sure about the time.
Yeah, so BCs, business correspondence is regulatory, they are authorized for banks to appoint.
Yes. In fact, in 2016, RBI changed the concept of a branch. Earlier we had a branch, we had a satellite branch, a satellite office, we had ultra small branch, and all these extension counters. So all that have been scrapped. And now it is no more called a branch, it's called a banking outlet. And a banking outlet can be manned by the bank staff or by an agent.
By an agent. They are called BCs.
Business correspondent. Yeah, so in all these places, and then you have all these places where there is no bank branch. Let's say you appoint a person who's got a store there, who's selling groceries or ice creams or whatever. This becomes additional income for them. So they become a business correspondent. While their normal business is happening, anybody can walk in there.
Is that BCs for any commercial banking activities, account opening?
They are authorized to collect the documents for account opening and pass it on to you. You can do all remittances, payments,
deposit, withdrawals, up to the ceiling, very good concept. And is that part of the financial inclusion study?
Yes.
Okay. Financial inclusion study of the RBI, that's the part of that.
Yes.
So to reach out to the unbanked.
Yes.
And reduce the
that is the only way.
That is, and also reduce the operating cost for the bank.
Exactly.
Okay. So with that note, I think any questions? So
there was this legal validations on replace signature with Interesting question. So, the most important authorizations, of course, we have a legal department which vets all this. So, when they log into the system, they accept certain terms and conditions. And since they have logged in with their credentials and they have accepted, a lot of these things are taken as legally valid. It's allowed. But as far as signing a legal document, where it's not allowed, where a vet signature is required, we will take, but as otherwise for HR, that's allowed. But on the customer side, India has also come up with something called e-sign, like e-KYC. There's e-sign, which is again linked to the Aadhaar infrastructure, which can be used to digitally sign legal or legal documents. It's still in a nascent stage, but it's something.
Okay, that like question comes to my mind. Who's the custodian of eKYC in India?
Aadhaar, UIDAI.
Okay, so they are
not eKYC, of the data, customer data.
data
So they provide eKYC as a service.
service. So it is like and that's a non-government entity.
It is a non-government entity.
It's a private company.
It's a separate act.
It's a separate act. Okay, if I need to verify KYC,
No, you cannot.
as a
You have to be authorized to use the services. There are a bank has
who provides the service?
UIDAI provides a service.
And
So I have to become a member. I have to sign up with them, and I have to pass through a lot of certifications to make sure that that our systems are safe and
So UIDAI is an independent organization.
Yeah.
Set up by
The government.
government. It's not a private body.
Not a private
It's not for profit body.
It's a not for profit.
Under a government act.
Right. Because the reason I'm raising is in Nepali banking, I think the stakeholders are discussing to give the eKYC to a private entrepreneur as a central repository, and I'm objecting to that. So just raising that.
I think it's a very fair point because the moment it's
Right. Only from the data security point of view, even if you're giving to private entrepreneur, like to run a central eKYC, then this is a lot of.
It's a not for profit, but they provide a service, and now earlier it was free. Now they're starting to charge for it. The government, UIDAI, and there's a lot of money to be made because for every government can make a lot of money with that.